morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at one stock and one ETF on the Trinidad and Tobago Stock Exchange, Sagicor Financial Corporation, or SFC, for the 6-month period ended June 2017. And we also take a closer look at the Clico Investment Fund, or CIF, as some concerns have been raised by investors about recent price movements. So let's turn first quickly to Sagicor. And for the 6-month period ended June 2017, Sagicor recorded a diluted earnings per share of just around 41 cents TT equivalent, an impressive 22% increase over the comparable 6-month period in 2016 of just around 34 cents TT equivalent, so 7 cents per share change there. Driving this performance was an increase in total revenues of around 1.7% from just around 3.5 billion TT equivalent to around 3.8 billion TT, as well as a decline in total benefits and expenses of around 15.8 million TT dollar equivalent from just around 3.42 million TT to just around 3.4 million TT dollars. Net income for the period overall increased 47.5 million TT equivalent from 231 million to just around $278.5 million. Taking a closer look at the revenue story, and we can see that there has been a slow but positive trend upward in terms of revenues generated over these 6-month periods. And as we can see, from 2016 to 2017, net premium revenue increased to around $145 million TT equivalent from about $2.16 billion to just around $2.305 billion. Whereas net investment and other income, in fact, declined for the comparable periods from about $1.59 billion to just around $1.5 billion flat. Nonetheless, the increase in net premium revenues would have offset those declines in net investment and other income. Taking a closer look at the income by segment, we can see that there continues to be a positive growing trend in the Sagicor Jamaica business segment, moving from 226 million to just around 298 million TT equivalent. And that's pretty consistent with the positive story of Jamaica, whereby corporate earnings have continued to increase. With respect to Sagicor Life, in green, there has been some decline from around 186 to 135 million, but nonetheless, again, a positive overall trend for Sagicor Financial Corporation. So how does Sagicor stack up to the competitors and to its peers in the sector? Well, Sagicor right now at a price of $8.30 is trading at a price to earnings multiple of just around 6.2 times compared to the sector average of 10.5 times, and at a lower multiple than Guardian Holdings Limited, its nearest competitor, at around a PE of 9.5 times. It offers a trailing dividend yield of just around 4.1%, above the sector average of 3.5% and comparable to Guardian Holdings as well at just around 4.05%, and offers one of the lower payout ratios, trailing dividend payout ratios of just around 25.3% in the bottom right-hand side of your graph versus Guardian's 38.5% and the sector average of just around 35.6%. So on the basis of steady and improving financial performance and relatively attractive valuations as well as a decent dividend yield, Bourse maintains its buy rating on Sagicor Financial Corporation. Turning quickly to the Clico Investment Fund. So the Clico Investment Fund would have declined in price around 8.5% year to date, causing some concern amongst investors. And in fact, over the last month alone, the unit price would have declined just around 7.5%, from around $22.40 to just around its current trading price of around $20.70. Investors or the market may be feeling some concerns about the recent rumblings between the government and CIF Financial shareholders in terms of who will get eventual control of those assets. Now, just to give you a bit of background on the Clico Investment Fund, or CIF, it was created as a mechanism for bondholders, policy holders who would have received Clico zero-coupon bonds, particularly 11 to 20-year bonds, to monetize those bonds by converting those bonds into units of the CIF. At inception, the CIF had in it just around $5.1 billion worth of assets, about 70% of which comprised Republic Bank shares, with the balance, or the other 30%, comprising government bonds which paid a 4.25% coupon. The CIF pays out at least 95% of the distributable trust income, or basically all of the cash that it receives through interest and dividend payments, less expenses to its unit holders. Again, at least 95% of that comes out to investors or unit holders in the form of cash flows. So why has the share price or the unit price declined so quickly in a short space of time? Well, as at June 2017, just around 86% of the shares in CIF, or the assets in CIF, in fact, were comprised of Republic Bank shares. No surprises there. The prospectus does allow for CIF to accumulate Republic Bank shares to substitute for government bonds as necessary. And here we can see with the blue line the net asset value of the Clico Investment Fund. That's the estimated net asset value as done by Bourse, as well as the traded share price or the traded unit price in yellow. And we can see this very sharp dip towards the end here from around $22.40 to just around $20.70. Whereas the net asset value has been relatively stable after some period of decline towards the first quarter of 2017. It has stabilized at just around $23 per unit. So some cause for concern based on headline news perhaps, but based on the net asset value estimations, the unit price has remained relatively stable from a net asset value perspective, but on a traded value price, the discount at which it trades to the net asset value has somewhat widened to just around 9% or thereabouts, the widest in quite some time actually, perhaps, and it's also trading at the lowest price it has in the past 4 years. Now, why do investors typically hold their CIF units after conversion, or even buy CIF units on the secondary market? Well, given the relative price stability that has prevailed for quite some time, it's all about dividend yield. And CIF at its previous relatively stable levels of around $22.40 to $22.50 has offered investors just around a dividend yield of about 4.3%. With the recent price corrections and no real change in the underlying cash flows of its assets, that is Republic Financial Holdings share price, as well as the government bonds, its dividend yield has now climbed on a trailing basis to around 4.7%, which is pretty healthy compared to what's available in the market. And here we can see the top 5 dividend yielding securities, with TTNGL at 6.8%, followed by OCM 5.1%, NFM 4.76%, and CIF at 4.7%. So what should investors do? Well, the Bourse view is on the basis of a relatively stable net asset value and relatively stable dividends, distributions being paid by the fund on a historical basis. Bourse maintains its buy rating on CIF. So some positive news there in this current market. That's it for this week's Bourse report. For more information, give us a call at 226-8773. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a great week. This has been the Bourse Report.